All right. Good morning, everybody. My name is Lewis Rhodes, and I want, on behalf of myself, Alan and Evan, my co-panelists, I want to welcome you to our first corporate and contract compliance webinar between General Counsel and Sahouri Insurance. About 6 or 7 months ago, we started talking between Sahouri and General Counsel about ways we could provide some services to each of our clients. And the overlap between government contracts and small businesses and the insurance market and a very smart insurance broker and provider made too much sense. So those conversations led to the thoughts of doing a series of webinars here on compliance, and here we are. I just want to let everyone know we're going to be recording this session. So I think most of you have your videos off, but if you're not comfortable showing up on a recording screen, make sure you keep. We'll go ahead and share this with. We'll have this out on our websites and share it for people who are unable to make this seminar be able to have access to the information in the future. Can I get next slide, please? So here are your panelists. I try to surround myself with smart people so I look smarter in process. I'm a government contracts attorney. I lead the government contracts practice group at General Counsel. I've been here back in private practice for about the last 16 months or so. Prior to that, I spent about 7 months as an in-house counsel, primarily at small businesses. So I have a pretty robust understanding of what small companies go through. And throughout this process, I'll talk about some of the screw-ups and mistakes I made when I was an in-house counsel at a small company, so we can help teach other folks how to avoid some of those problems and pitfalls. With me, I have Evan St. John, also from General Counsel, and Alan Hudson from Sahouri. Evan, why don't you take 30 seconds to run us through your bio and introduce yourself?
Yeah, absolutely. So I'm actually a fairly new arrival at General Counsel. I've been here since January, and I'm a senior corporate attorney, and I lead up our corporate practice here. And prior to that, I worked at 2 different firms in the sort of greater DC area, doing similar work, focusing on small and medium-sized businesses, especially, which has a strong overlap with the government contractor community. And having that small business knowledge has helped to sort of be able to help with compliance for a lot of those upstart companies that are especially seeking their first or second contracts. So hopefully we can help you out today.
All right, thank you, Evan. And more importantly, Evan's got a voice for this stuff. He should be a radio DJ somewhere, maybe if second career. Alan, can you take a minute and introduce yourself?
Hello, everybody. My name is. No, I can't top Evan.
No,
I'm Alan. So I'm the director of the property and casualty space at Sahouri Insurance. Unfortunately or fortunately, I was born and raised in the business. Dad has a risk management firm. Mom has an insurance compliance firm. And yeah, my background is really risk management and commercial property and casualty. I teach insurance to insurance professionals at the National Alliance of Insurance Education and Research. Yeah, and I will forewarn everyone that property and casualty is my sort of primary focus. So this being my contribution to further series or future series will be a little heavier, but I will be deferring quite a bit to the experts on legal and compliance.
yes, I tweaked our webinar topics at the last minute and caught Alan with a couple of curveballs.
No, you didn't.
So,
No, you didn't.
but he's game, and he still knows a lot more about this stuff than we do.
Well, there's so much great stuff in here. You know, we could talk about this for hours.
Absolutely. The one thing I know from having been both as a outside and inside attorney is companies are very bad at understanding what insurance can do for them and how they can use insurance to reduce their risk. So, and the other thing is I think a lot of companies fall they fall prey to making some assumptions when they have some corporate changes that I think we're going to focus on. We're going to focus today on your business life cycle when you're a small business and then you start growing and then you take some work and maybe win some work out of state and how the regulatory and insurance regs change. A lot of companies make some assumptions that things are going to be the same when you leave Virginia and go work in North Carolina or Ohio, New York, or God bless you, California. So we're going to talk about some of those changes and what happens when you hit those life cycle events. Can we next slide, please? So generally though, we're gonna talk about compliance. All right, when you hear Evan, when folks hear governance compliance, you're a smart corporate lawyer. Translate that for people who don't speak law. What's that mean?
So a lot of people sort of get distracted by thinking of sort of outlandish regulations that they may be subject to, but really it's making sure you have a company that is established and registered with the states, making sure you have the appropriate business licenses and that you're paying your taxes and doing all the things that you need to do to be a successful business. And if you're an entity that has some liability protection, doing what you need to do to protect that shield. And I'll go over a couple of things briefly, but if I don't get to items that you're expecting, we'll likely address it later on. So I'm intentionally brief right now, but the first step for any company is setting yourself up with the state. Usually that requires, in Virginia, for example, registering with the Virginia Corporations Commission. The type of business could be a LLC, a corporation, or any other thing that may be more particular to your needs. But you want to make sure that you are fully registered and that each year you pay your annual fees, and if applicable, submit your annual report. I've had so many horror stories about people just assuming that once they set themselves up, they're good to go. And it's one of those things that seems so basic that it slips a lot of people's minds. So if you think to yourself that you haven't received something in the mail for a while from the State Corporation Commission, jump on their website and check to make sure that you're good to go. Another common issue that I see is business licenses. I think a lot of people in the government contracting space have more particular licenses, but many people don't know that a basic business license is separate from your state registration for your entity. So make sure to keep that current. A lot of times, the penalties for not doing these things aren't generally catastrophic, but they do accrue over time. So it's better to be proactive than reactive in making sure that you're complying with these things. Some other items that may come up are federal, state, and local taxes. When you start up a new company, you need to, generally, if you have employees, you have to register for unemployment compensation or unemployment insurance and workers' compensation in that state. You have to register for sales and use tax, and make sure that you set up withholding for your employees. There may also be state and local income taxes and corporate taxes that you may be subject to. So make sure, especially on like the city and county level, that you're aware of what your local regulations say. And if you have any questions, reach out to your lawyer or CPA or anybody else that is a professional that can help you, because sometimes it's not particularly obvious what you need to do.
Yes, and and I'll sprinkle in my war stories as we're going here, and like lessons learned for everybody. So I once upon a time was the general counsel for a small business government contractor, and we had a contract at Fort Eustis down by Williamsburg, and all of a sudden we get a letter in the mail about being non-compliant with a local business license, and we owe the city some taxes, and we made the mistake that many government contractors make, is that, well, our employees are only sitting on the military base doing work here, so we don't have to deal with your local license and regulations. And when we responded with that, we very quickly got a letter back that they have, I think, form letter to send to all their contractors that why that was wrong and why we still needed to pay their taxes. So again, Evan's spot on. I've lived this where, you go get work somewhere, you assume, hey, I'm working on the federal installation, I'm immune from these local ordinances, and that would be absolutely untrue. So Evan, I've done everything I need to do in Virginia. I'm all registered. I got my stuff. I'm good to go. I got my license here. I'm registered with Fairfax County, and I get a job doing some work in Maryland. Am I good, or do I have to take some other steps?
Maryland is a good example. It depends on what state it is you're going to, but yeah, in order to be in compliance and be able to sort of fully avail yourself of the laws of a state, you need to make sure that you're registered to do business in that state as well. Usually it's not a big hurdle. It requires going on usually the state or the Secretary of State or the Corporations Commission site for that state, filling out a 1 to 2 page form that sort of summarizes who you are and what you're doing. And then you should be good to go from that point. Again, make sure that you're paying state and local taxes on employees you might have that in that state, and sort of look into what local issues may affect you. But assuming that everything will continue as normal is almost assuredly incorrect. So just be aware of that.
Yeah, and I think that's the good point there. We all have heard the saying about what happens when you make assumptions, and unfortunately, when you're in a legal regulatory environment in a heavy regulated industry like government contracting, assumptions can really hurt. And like I said, and as I gave in my example, a lot of times federal contractors who are only putting employees on a federal contract working on site on a federal installation often think they're removed from these state and local requirements, and that is absolutely not the case. So the best thing to do is the good lawyer will tell you an ounce of prevention is worth a lot more than a pound of cure. I'm sure Evan can also give you stories of clients who failed to do something and then their penalties were 7 or 8 or 9 times the cost of if they had done it right the first time.
Yeah.
So picking up the phone and calling a smart guy like Evan is usually it's worth a half an hour of his time to make sure you avoid the problems.
Yeah.
Can we get the next slide, please? All right. So, Alan, we'll let you chime on here on a general level of some insurance issues that kind of hit the general regulatory framework and some other big compliance mistakes that you see companies making on the insurance front.
Right. Yeah. And like Evan mentioned, a lot of the failures for compliance can rack up penalties that definitely outweigh the costs of doing it right the first time. When it comes to benefits for our employees and the requirements of having certain types of benefits at certain levels can not only take us out of compliance, but can create a tremendous liability for the company. So a worst case scenario, depending on which insurance or which benefit isn't being provided, could be bankruptcy or a significant liability lawsuit. It all starts with ERISA, HIPAA. Then we get into 50 or more employees. You have to start taking into consideration ACA reporting, summary plan descriptions. It really sort of balloons after. Well, there's a lot of regulations for the company that has one employee, but most of these contracts are going to require general liability insurance. They're going to require workers' comp insurance. Depending on the nature of the contract, if it has some sort of physical, like construction or labor element to it, there could be bonding requirements, performance bonds that would guarantee that the company, if unable to complete the contract, has an insurer that would step in and pay the lost costs to the prime or to the government to step in and continue the work. But talk about war stories for a moment. We get it at least a dozen times a year. Someone bid on and got their first contract. They were working at Deloitte or Booz Allen, and they hit it big, right? And I think a lot of times it's more the excitement of the opportunity to really take it to the next level that puts blinders on a lot of people and distracts them from, the second and third pages of these requirements. And in page 2 and 3, it usually doesn't get touched on until it's like you're in final consideration. And then you flip it over into, I need general liability insurance for 1 million. I need an employee benefits plan. I need all these things. And besides the
And
application,
I need them tomorrow,
and I
right?
need them tomorrow, right? I mean, I remember someone pulling up in like a Ferrari. Like, I need insurance. I just won this contract. It's like, okay. So one of the horror stories we had was they bid on like a $5 million contract for the metro work. And, the requirement on page 3 was you need a $3 million payment and performance bond. And it's like, okay, I need a $3 million performance bond. But what they don't realize is, unlike liability insurance or workers' comp that is statutory limits, right? Or some of these benefits coverages or plans that have sort of premiums and set asides for how much, right? With bonding, if you don't have $3 million, you can't get a $3 million bond, right? Bonding is the idea that this carrier is saying, oh yes, they're good for it. And if they fail, I know I can quickly recover the $3 million that I'm gonna have to pay to have someone in and step in and fix it. So they got to like the bid award stage and completely were incapable of getting this final requirement. And so that's why it's really important in advance, from almost from day one, before we even start bidding on this contract, to take into consideration, is it what states it's in? Is it on a federal site? Because when it comes to workers' comp, for example, you absolutely still need the work comp, but you need to also make sure that you're separating the payroll for the federal, like the payroll while they're on site, on a government site, versus the payroll when they're not. So that in itself can also have really bad implications, right? So knowing what you need and what your exposures are and what the requirements are very important.
So Alan, what you're saying is when I decide I'm going to bid this big contract and I'm looking through the RFP and I'm starting to shape out my proposal and price it, I probably should give you a call then to make sure that you're telling me everything I need. So when I'm pricing my proposal, I include my insurance costs and other things so they're not coming out of hide on the backside, eating into my planned profit margin.
This is an extreme example, and a great question. This is an extreme example, but to insure a clerical employee costs 10 cents per $100 of payroll, right? So if you're paying someone $50,000, you're going to pay about, what is that? 10 cents. It's about $50 per year for workers' comp per clerical employee. If you are a contractor, you're immediately paying $5 per employee. So the second you pick up a hammer, the second you're actually bending over and lifting something, immediately your cost 10x. And in a real extreme example, a roofer or any company or contractor that's working at heights above 8 feet, that's $20. So your workers' comp costs to hire one worker at a height of 8 feet, 50, at 100,000, let's say, you're immediately paying, $20,000 per 100K in payroll. So 20 cents on the dollar. That's a big cost consideration. Absolutely.
So if I'm a contractor who's thinking about changing my business model or expanding into a related area, I shouldn't assume that my insurance costs are going to be comparable to what I do now. I need to pick up the phone and talk to you and understand how my costs are going to go up so I don't end up upside down on my contract, when I win it.
Right. And that's a big concern. Benefits and a lot of healthcare plans, that they're underwritten based on our health more so than what we're actually doing. When it gets into what we're actually doing for the contract, that's where the delta can change dramatically. Yep.
And Alan, we just had a quick questions come in from Kara. They're actually directly on point here. So the specific question was, do you have a rough idea if I'm a federal contractor with an IT help desk person, like what's my workers' comp costs? Is that the clerical employee basically, or is that something a little bit different?
Correct. Right. So clerical is going to be someone that is at a desk, typically does not travel frequently. I mean, other than to and from the job site. someone that would be traveling for a living, or not even traveling for a living, but as part of their responsibility. For example, a salesperson, or someone that is engaging clients at their premise. They're going to be what's called a salesperson class code, to consider the fact that they're going to be driving as part of their job. And that becomes immediately 3 times more expensive.
Okay, and the other question Sarah had was, and everyone, I should have said this at the start. Please, while we're talking, if you have questions like Kara just did, please chop them in. They'll pop up on me, and we'll try to answer them as we go. Interactive is usually more fun than just us talking at you. So pretend we're all in a room somewhere together, and you can raise your hand and ask us questions. So the other questions you had, Alan, which we'll address here and then jump into our next topic is. Let's assume we're all local in the same jurisdiction. When I get my workers' comp policy or I'm applying for my workers' comp, do I need to delineate locations? Now, let's to make it simple for this case, and we'll talk later about other instances. I have 3 sites in Fairfax County, Virginia, where I have employees sitting. Do I need to differentiate where they're sitting for that case?
So every policy is going to have a location address. A workers' comp policy is going to have a location address. It can be the primary location. So if you have multiple in the same state, you do not need to delineate by location, just by state. So if you did take on another contract in Maryland, for example, you're going to need to have Maryland payroll separated from Virginia payroll. And that's not determined from where they're leaving and going to and from their job, but actually where their job is located. And so if you did have employees in Maryland going to a Maryland federal or state office, or even wherever they are going, there would be a separate Maryland address. But workers' comp is not limited or restricted in the absence of, a scheduled location, right? Because this is a employee benefit in a way, and there's a lot of protections in place. We might face an audit, right, or a penalty unexpectedly for misreporting, but ultimately the coverage will be available for the employee themselves.
Okay. All right, can we jump to the next slide, please? All right, we got a couple other questions. These questions we'll jump to these questions. We'll either address them here or we'll get them at the end because there's a couple good ones in there that I think we need to talk about. So as I said at the beginning, we're going to kind of cover we're going to go through a kind of business life cycle. I think is good because in discussing this with Alan and Evan, like we've seen, this is the areas where we see our clients make mistakes. When you're going status quo from day to day, your industry, your requirements, you're usually good. Where mistakes occur is when you have a change to your business, whether you grow, you win a new contract that's somewhere in a different jurisdiction, and that's where you fail to do things you need to do. So the first thing we want to talk about is, hey, congratulations, you won a big contract. Now what? Okay. Say you're a small business, you've been a subcontractor, you've got 10, 15 employees, you take your first dive into the deep end of the pool as a prime, and you win and you're adding 35 employees, you're going to bring your head count up to about 55 overall employees now when you onboard everybody. That's a significant change. And, Alan touched on a little bit earlier with the 50 number. That's kind of a magic number in a lot of areas. And Evan, I see you shaking your head. So why don't you chime in a little bit and talk about how some rules and laws kick in when you hit a certain FTE headcount.
And Evan, please feel free to move in on my side too, because especially on the corporate benefits.
I will clear out the lane for everyone. Yeah, so a lot of, especially federal statutes, come into effect based on the size of your company. Sort of the important numbers for many employers are 15, 20, 50, and 100. And that has to do with when these additional regulations kick in, especially if you're going to be going through significant hiring and you're going to go in excess of those amounts soon. It's generally good to talk to any of the professionals that you have available, whether that's a lawyer or a well-trained HR person, to make sure that you are aware of those and the hurdles that they'll present, both sort of financially and from just sort of a logistical standpoint. See, a lot of government contractors, and especially, are subject to a lot of the anti-discrimination statutes, regardless of their size, just as a condition of being a government contractor. And that's a lot of what kicks in the 15 area. But the big hurdles that you really want to be aware of are at 50. The Family Medical Leave Act kicks in, which you have to be able to have someone on staff who can explain the capacity of people to take those longer leave periods. Even though they're unpaid, there are a lot of sort of ramifications of having to rehire and extend health coverage and things like that, that you need to be aware of beforehand. Another big one is the Affordable Care Act, or Obamacare. And at 50 employees, there becomes a requirement for a employer to provide reasonable and affordable healthcare coverage for their workers working over 30 hours a week generally. And a lot of people sort of are aware that requirement exists. What they don't realize is how easily it is you can sort of fall afoul of that. So if a single one of your employees obtains coverage on the open exchange, you are technically subject to a potential penalty for that, for not covering them. So they're actually, especially in recent years, they've done a good job of increasing the number of professionals in this area who can help you out ahead of time. So make sure to reach out to them beforehand.
Might I also just piggyback off of that and say, that there is insurance and sort of benefits that are required to be provided, and a lot of times, we pick up that, but then there's also insurance that actually falls on the property casualty side to protect the employer and some of the executives, like the HR people, protect them for failure to comply or failure to provide, as long as it's confirmed or evidence that it was a mistake, right? It's like sort of plan management E&O insurance, right? So there's employee benefits liability coverage and employment practices liability coverage that cover both sort of the failure to administer or improperly administering these plans, or allegations of discrimination or wrongful termination that may or may not be triggered by a failure to comply with any one of these requirements.
And that can be especially helpful if you're going to get locked in at a price point on a long-term government contract. One of the worst things that you can have is sort of volatility in your spending over a series of quarters. And so if you,
for any other reason than to really protect your assets and the cost of the coverage, like employee benefits liability, it's something that has to be elected or picked up on the package policy in the GL, but it's $300 a year. It's almost just like a rider that we at Sahouri require almost. It's like you don't have the option to elect it. You really just have the option to not take it, right? We're including it because,
no-brainer.
401k failure or an ERISA requirement failure or a plan administration failure, $1 million of liability coverage for $300 is a no-brainer.
And especially in those. Oh, go ahead, Liz.
I was gonna say, Evan, what's your billable rate?
$325.
So you can either get $1 million in insurance or an hour of Evan's time. Evan's pretty valuable, but I think I'd pick the $1 million of insurance most times. Because generally, if you have a problem, it's going to cost a lot more than an hour of legal time to fix it. So, and I've seen this on both sides of the fence. Being a in-house guy where we were underinsured. And being an outside counsel where my clients were, did not have the insurance that they needed to have. And, a lot of companies make the mistake of trying to cut costs. Insurance is probably the absolute last place you should cut costs. And I'm saying that and I'm not the insurance guy, and I'm telling you that. So Alan, when we talk about the benefits, now I'm a small business. I've got 25 or 30 employees and I'm bidding this opportunity that's going to push me over the 50 employee head count. Right now, I don't offer benefits, so I have a wrap rate and in my indirect rates that are reflective of not having benefits. What kind of, what's the cost materiality when I need to start adding health benefits for my employees? We all hear medical insurance is outrageous, it's expensive. So if I'm a company and I'm going to cross that line and have to add benefits, like what kind of, if I forget to price this into my proposal, what's it gonna cost me on the backside?
Well,
so obviously, I'm not expecting you to calculate it down to the red cent.
Yeah, no, it's a great question, and it's going to be underwritten based on the age, the health of the employee sort of pool, or if you will. And I don't I can't really speak directly to the price currently. Those are my benefits counterparts, but I have a very relatable story. So we have a client, 500 employee client, government contractor, nothing crazy. But, I stepped in and we helped them on the property and casualty side first. And their property and casualty insurance, all lines, was maybe like 80,000. And we ended up improving their coverage on let's just say, on all levels and saving them about 30 grand, right? 80 to 50K. So I'm giving myself a pat on the back. A month or two later, our benefits folks, Vlad and Jody, and they assist the same client with their benefits and managed to save them over $3 or $4 million. But that's because their benefits costs were $5, $6, $7 million a year. And suddenly I'm like, man, I'm feeling pretty small over here having savings of 20K on 60K premium. But yeah, it is just night and day. I mean, we're all moving to higher deductible plans. There's other ways to sort of offset or mitigate costs, but we are headed to a more and more self-insured world, a self-administered world even, right? So that 50 employee threshold, really something you need to be prepared for financially. To sort of step over, and then the plus side is you're retaining or you're retaining and attracting maybe a higher class or higher level employee that might offer your company the capabilities to take the next step or bid on that next level of contract. But yeah, the costs compared to property and casualty, right? Property and casualty is going to cost you up front to get the contracts to grow from that startup to that first level. But then it really becomes employee protections and benefits, 100%.
Okay. Yeah, no, that's, so the lesson here for everyone, if you heard those numbers, is if you think you're bidding a contract that's going to require you to provide health insurance if you win it, going to kick you over that number, you need to make sure you're talking to smart insurers and getting your pricing in so you can factor it into your bid price, or else you're going to win a contract and then promptly lose $100,000 your first year.
Well, and at that level too, you're usually bidding on an open contract and you're taking it from someone potentially, and so really understanding what their costs are, or what their employee benefits currently are, you're going to have to provide that or better if you want to bring over any of that talent to continue that project.
Very much so. Actually, on this topic here, this is actually a really good couple. We're getting a lot of questions in, and guys, I appreciate it. Keep them coming. Now, so you win a new contract and you got to add a bunch of people, but you can't do it all yourself. So you're going to bring in a subcontractor for the first time, or some 1099s. What are your requirements for workers' compensation if they're subcontractor or 1099 employees? Can you insure them, or does your sub or the 1099 person have to bear some risk for the workers' comp? What can you do, and what's your liability if they're not covered?
Right. That's a great question, and the short answer is your subs, right, or your 1099s. Your subcontractors need to have workers' comp of their own. Otherwise, you will be liable for their employee injuries. Same thing with a 1099, believe it or not. A 1099 is not required by law in Virginia to have workers' comp, right? In Virginia, it's 2 or more full-time employees. Maryland, I think it's 3 or more. But the point there is a 1099 without workers' comp becomes your workers' comp liability. And if you do not report them as payroll, you will be audited, and they will, require basically evidence of all of your spend to those 1099s and subs. And it's not that they wouldn't be covered, but insurance companies don't like insuring subs or 1099s because it's assumed that the control you have over those subs or 1099s versus true employees is limited. So the likelihood then of injury or mistakes that might lead to an increased probability of injury, right, is an absence of supervisory sort of a situation, and they will either non-renew, right, or charge a much higher premium, right? So one of the questions the carrier is going to ask is, do you have subcontractors or 1099s? If yes, what percentage of your costs, right? And once that percentage goes over 10 or 20%, suddenly the interest dries up very quickly. Now, if you have subs that are insured and you get a certificate of insurance from them, carriers love that, right? At the audit, because anything if you can demonstrate that those subs have the insurance, you are completely absolved of any payroll costs or charges related to the subs.
Yeah, now Alan stole my thunder, Evan. I was going to ask you, what can I do in my teaming agreement and subcontract to make sure I fix this?
Well, yeah, that's my mom, insurance compliance company. She tracks certificates and subs for a living. So.
Yeah, and the best thing you can do is establish expectations early. So if you're going in with a teaming agreement, or if you're actually setting up an ultimately awarded subcontract for an awarded contract, you should, even though it is generally understood, you want to be very clear that subcontractors are responsible for their own unemployment insurance and paying their own FICA taxes and doing all those things that they should be doing as subcontractors. Because, if they violate that, you want to have some recourse against them, and you want to be able to say, we discussed this, it's in our contract, and you violated it, and therefore, even if I realize some damages from the government or some other authority coming after me, I can then sue you under the contract that we signed very easily. So just make sure that those issues are addressed when you're signing those agreements.
And yes, and make sure you get your attorneys to review and draft your indemnification language in your contracts, because
Yes.
That's where you can really run yourself into trouble.
Good attorneys, right? I've seen some really bad indemnification agreements.
Yes,
So
and if you're and if you're on the ball, that's where you'll do most of your fighting when you're writing and redlining a contract.
Yeah.
So I'm going to speed us up a little bit here, guys. So can we jump to the next slide? So the next section in growth, and we talked about this a little bit earlier in the compliance and in the insurance and the general intros. You win a new contract, say you're a Virginia company, and congratulations, you just won a job at Fort Benning in North Carolina. I'm a Marine, I'll say Camp Lejeune. There you go. So you're down in North Carolina, and that's awesome. Now, I've never done work in North Carolina. So Evan, what are the first 3 or 4 things I should be doing as soon as I get my notification of award for out of state?
Yeah, it's similar to setting up a new company in a lot of ways, but just sort of more streamlined. You need to register to transact business in that state first and foremost. And then, you need to know where your employers are working, if they're going to be working within that state. And I'm sorry, this overlaps with our next one a little bit, so I'll try not to step too heavily on its toes. But you need to, know who is, if you need to have unemployment or other insurances in those states for those employees that are working there. You also need to be aware of differences between sort of employment and regulatory laws in those states, so that you can decide whether you want to apply those rules to all of your employees or only the ones in that state, and just sort of do a little research before you jump in, and make sure that it's something that you can sort of financially handle when you're quoting prices.
Correct. And, and I'll chime in on the government contracting side. You make sure you're paying attention to your wage determinations. Don't assume that they're the same. A lot of times you're required to bid at the wage determination rate, but just make sure you're paying attention to those, and don't assume every state is the same and you're paying everybody at the same level. A contract that's in Montana is going to have very different pay rates than one in Northern Virginia. So that's a GovCon. Even on the federal side, things change a lot from one state and locality jurisdiction to another one. So Alan, on the insurance side, I'm a Virginia company. I'm registered here. I got all my required insurance in Virginia, my liability insurance. So I start working in North Carolina, and I never called my insurance company, and I got an employee who gets in a car accident on the job. Do I have a problem, or, and what should I have done to prevent that problem?
Great question. Yeah, no, what you just mentioned struck a nerve too. Like, oh yeah, wage and hour disagreements or disputes is limited in terms of coverage, right? So that's especially, you gotta be especially careful about that, right? Those wage requirements, because that's not a liability coverage per se, right? I mean, if you were paying somebody X for 2 or 3 years, or 10, 20 people X for 2 or 3 years, and then suddenly, there was a dispute about, incorrect payment, that's not something you can then lean back on liability. That's gonna be coming pretty much entirely out of pocket. So that's something to be especially concerned about. Moving around state-wise can be very confusing and bring up a lot of concerns. So workers' comp is one of those, right? Besides the type of work we're doing, right? As I alluded to, between the clerical employees versus, a salesperson, et cetera, you also got state litigiousness to consider. In other words, how much it costs to insure an employee in Maryland or Virginia can be materially different than in Texas or in New York or California, right? So the California work comp rates, for an example, the clerical, when I mentioned here, it's about 10 cents. You're looking at 70 to 80 cents in California. Contract work, especially physical construction contract work in New York, has become unmanageably expensive because of legislation that has passed that I won't get into too much detail, where intentional acts is still covered. So I can literally hit myself over the head with a hammer, have plenty of witnesses watch me do it on purpose, right? Get a concussion, and then be out with paid workers' comp benefits while I recover. Right? I know.
God bless New York.
I can literally step off a catwalk and fall flat on my face and tell someone I'm doing it on purpose, and there's still work comp benefits to be had. So where's that cost coming? That's definitely transferring down to us. So that's one example where a law or regulation, the litigiousness of the state plays a huge role in our costs. New York has its own separate unemployment insurance policy. So you actually have to purchase an insurance policy if you're working in New York, separate from unemployment insurance per se. Workers' comp, as far as reporting, however, if you did have a contract awarded and you were in Camp Lejeune and an employee got injured down there, but your work comp policy just says Virginia on a location, rest assured they're covered, but the carrier is not going to be happy and will, of course, charge you retroactively for that payroll, right? But the real big issue when you're moving in a different state or with a different type of contract is making sure the class code is accurate, right? So if you have employees doing something, changing light bulbs at Camp Lejeune, let's say, but your workers' comp is just for your executive office employees. Not only are you going to have a new class code added that is going to be janitorial services, but all that payroll is going to be charged at a rate that's probably going to be 5 times what you're paying for your executive employees here in Virginia. And one of my benefits folks was nice enough to IM me that question about the benefits cost per employee. On average, and on the low end, it's about $8,000 a year per employee benefit.
So if I bid a contract with 20 that's going to pick me over 50,
that's right,
and I fail to factor this into my cost and wrap rate, I'm taking what's that?
50,
What's 8 times 50?
that's
400 grand out of my pocket.
Yeah.
So Evan, so we're hearing about all these expenses, and I'll let the corporate and employment lawyer answer this one. One of the questions we got is, can I make my employees 1099s to avoid some of these costs? And I know that's a very ripe question, and you're going to tell them why that's a tragic mistake. But I'll let you address that one.
Yeah. So I'm going to say potentially yes, but almost certainly no. And the way that you determine whether or not someone is a 1099 or an employee is sort of a archaic multi-factor test that is impossible to administer, except, it has to do with the level of control that you have over that employee or contractor. If you have someone who is coming to your site and using your tools at hours that you assign, that person is an employee. That's just how it's going to be. And misclassifying them as something else is a big mistake. There are some edge cases that you would want to bring up with someone who's helping you out, whether that's an attorney or HR person. But counting on being able to reclassify is generally a mistake. And as we're seeing, in the headlines in the past couple of years with companies like Uber and Lyft misclassifying employees, that can really become very expensive very quickly. So that's not something you want to play around with as a money-saving device.
Yes, and as Alan just alluded to a few minutes ago, this is a wage and hour issue. If you misclassify a employee, they now are coming after you for a wage and hour claim. And as you heard Alan say, you can't get insurance for that.
Yeah.
I actually have a client who almost went bankrupt over a wage and hour issue. They were not paying employees until they showed up on the job site. Well, they were working at National Airport, and it took like 45 minutes from where they parked until they got to the job site. And the Department of Labor said they were on the clock from when they showed up. So my client, for a 2.5-year period, had to go back and pay for 45 minutes for all these employees for all that period. And it was very painful, and there was no insurance coverage, as Alan said. We also, and while we're on the workers' comp topic, we got another great question in about another state, in addition to New York, that requires you to purchase workers' comp from that state. The question was that typical, Alan? Go ahead and address that, please.
Yeah, no, it'll take us just a minute. So, and it's a great question to ask. I'm glad they did ask that. So, when I mentioned moving into new states, Virginia, Maryland, North Carolina, even California, and New York, when it comes to workers' comp, is going to get picked up on the workers' comp policy that's written on a form that's generally accepted by NCCI, which is the sort of the governing body of insurance contracts. Now, there are exceptions. Wyoming, Puerto Rico, Washington, which was the question at hand, right? The question, by the way, was, we were bidding on a contract in Washington or considering a contract in Washington, and I was informed that we needed to have a separate work comp policy for that state. And that is absolutely correct, right? It is correct. Wyoming, North Dakota, Ohio, Washington are all what you call monopolistic state funds, meaning the workers' comp, you don't get to choose between Travelers or Hartford or Hanover or whoever else. It is the state that administers the workers' comp coverage. And Your agent may or may not be able to assist. Your agent can assist you in facilitating the placement of the coverage and assist you with the audit, but really that is a one-to-one agreement. I mean, Ohio, for example, you go online, it's almost like just it's like another federal or sorry, state reporting. It's kind of like registering for a company. You need to register for the work comp, receive a certificate, and pay the premiums directly to the state. Good question.
All right, and I'm sensing a theme here, Alan. I think the theme is when I identify an opportunity I'm going to chase, I should probably pick up the phone and call my insurance broker and give them a general idea of what I'm doing.
Yeah.
So they can
unless you want to just memorize all this.
Yeah.
It's your choice.
So,
you can memorize everything we told you, or you can call.
Yeah. And having rolled up my sleeves and written proposals and worked on some pricing, it sounds silly saying it here cold, but you get in the middle of one of these things and you just don't generally think about it, and you just price stuff based off what you know. And the lesson here for everybody is don't make any of these assumptions. Jurisdictions vary drastically in their insurance regulation scheme and their legal requirements. Every state has a series of statutes that governs insurance within that state, not just workers' comp. It can be liability and everything. So it's really in your best interest to reach out and ask some questions, be it of your attorney or your insurance broker. And that brings us to the next slide, where I'm going to now scare the hell out of all of you whose workforce has gone remotely. So if you're remote workers, if you closed down for COVID and in quarantine and you hired an office in Northern Virginia and all your workers started working remote back home, and maybe they live in Maryland and DC, or they said, screw it, I'm not going to stay in Northern Virginia. I'm going to cancel my lease and go back and move in with my parents in Pennsylvania. Evan, do I now have a Pennsylvania employee or do I have a Virginia employee?
So this is a good question because it relies on a number of factors. One is it varies by state regardless, even in normal times. Number two is that we're experiencing a pandemic right now, which means most states have issued sort of emergency plans and regulations that go into effect that may sort of alter their considerations. I know I looked into this recently, and Virginia has not made any alterations to how it considers or whether it considers, employees to be working in a particular state. So if you have people who have decided to go home to their parents' places to work for 100 days out of the year, it's very likely that you're going to have to pay at least some taxes, or some combination of you and them are going to have to pay some taxes in that state that they're working in. Other states have expressed either in law or through their taxation office that they are not going to be sort of hunting people down to try to collect taxes because they know that COVID is a temporary thing. But it's really important that you sort of know how your state has responded, because you don't want to be at the end of this, and we don't know how long it's going to go on for, but you don't want to be a year and a half into things and not having paid taxes for a bunch of employees for an entire year in states that you didn't even know they were working in.
Yes, and this is something that should concern a lot of companies, because there can be some fallout. We heard what Alan was talking about in unemployment insurance, right? If you end up if you've hired a Virginia employee who then moved back home to New York and is working remotely out of New York, and then you lay them off, are you laying them off out of Virginia or out of New York? Frankly, right now, I don't think we could tell you until we knew a lot more facts about the situation. But there's a possibility that employee is deemed as a New York employee. I will tell you, in a lot of states, and Evan will back me up on this, I think, I may have an employment agreement that says Virginia law applies to your contract or my relationship with you. But if you're sitting in another state working remotely from that state, most states are going to own you. They're going to say the law applies where you sit and do your work. Mm-hmm. And you may think you're covered under Virginia law for your employees, but you may not be. You may be covered by by other laws. So if you have some employees who've moved remotely, or you've had employees who you're now hiring remotely because you have a broader pool of talent to draw from, there's a lot of legal and insurance issues that even really smart, savvy companies are not aware of.
Mhm.
And you would do yourself a lot of favors by picking up the phone and making a call. Whether it be a workers' comp regime that's covered in a different insurance policy, because if you're deemed to have a New York employee and you're not paying on the New York workers' comp policy, I'm guarantee you New York will fine you for that. And is that a safe assumption, Alan?
It's funny because the employee in question, if they were injured, would probably be covered. But you're absolutely right. New York will fine you, even if there is going to be coverage there. Yeah, that's if anyone caught this sort of look on my face, kind of like, oh boy, it's like I think I need to talk to my HR person to make sure we add some Florida payroll. Because we had a couple of employees that that did sort of COVID snowbird in Florida. And really, you're right. You're right about sort of the precedent. Like, I don't know. I mean, we're still trying to get precedents on what liability companies have for virus transmission, right? The coronavirus itself.
Yep.
Fortunately, there hasn't been a lot of litigation, whether that's because the court systems are pretty much shut down or 2 years out, or because it just hasn't materialized yet. But there's absolutely a lot of uncertainty around what coronavirus or what this has done.
Yep. You're talking. Right now we have a panel of people who despise uncertainty, lawyers and insurance. Insurance is there to cover the uncertainty, but your insurance companies like to have a little bit of certainty so they can price you accordingly. It's been a rough year for a lot of people on a lot of aspects.
But it brings up an important point as far as the workers' comp, though. I'm not too concerned about anywhere but Ohio, North Dakota. If you have any employees that are working remotely in those states, you absolutely want to get in touch with that state insurance fund.
And the first step to doing this is knowing where your employees are working. And I know a lot of employees are not either intentionally or just sort of accidentally not asking where their employees are when they're teleworking.
I'm in Bermuda.
Yeah, well, I have to say the willful blindness defense does only go so far. And one last thing I'm going to touch on the remote stuff, and then we're going to have to wrap ourselves up here, is a lot of people are happy with this remote workers because they feel like they can hire folks in other states. I'm a Northern Virginia company, and if I can hire somebody in Montana where the cost of living is a lot cheaper, I can pay them less. Like one area, I'm going to give you an area of caution here. Don't pick a number out of thin air when you do that. There's cost of living calculations and adjustments that are out there that you can have. You don't want to be the company that hires the one woman on your staff in Montana and pays her less than the 4 men on your staff working in Northern Virginia with the same title. You may not have intended to make that a sexual discrimination issue, but you just did. Now, if you have data that supports why you're paying less in a different area, you can use that to support it. But don't pick numbers out of thin air when you're hiring remotely, and if you're using a remote workforce, trying to cut down on your employee costs. Now we've got a whole host of really good questions that people asked from before and during this webinar. Unfortunately, we haven't been able to address them all. What we're going to do, though, is we have your contact info. And if you've asked a question either through the chat function here or in an email to when you registered, we'll get back with you with an answer to your question. My final thought here, and I think Alan and Evan would support me on this, is, my final word of wisdom to everybody is never make an assumption when you're doing this work. Assumptions are expensive. In the legal environment and, with your insurance policies, that ounce of prevention is probably worth about a ton of cure. You heard Alan talk about, the right insurance policy costs you $300 where you're paying $300 to $400 an hour for an attorney to fix the problem if you don't have the right insurance. Phone calls are simple. people want to, small businesses are squeezed and you guys have budgets and you want to try to save money. Cutting down on proper legal advice and the correct insurance are probably two of the worst ways to try to cut costs for your company, and it'll come back and hurt you badly in the back end. That's not me trying to drum up business. That's me having seen a lot of clients suffer for some of these mistakes. So, that's my parting thought. I'll give Alan and Evan 30 seconds each to give theirs. Then we'll wrap it up and, we'll respond to everybody who asked all these great questions. Evan, you're unmuted, so I'll let you go first.
Alrighty. Yeah, I don't have a whole lot to add to what you just said because that does seem to be the key takeaway. I think a lot of people see the initial costs of insurance and legal fees and they sort of bristle and think, as long as I can get around doing this, I'm going to do so. And that can lead to some very expensive sort of damage control down the road. Our favorite clients are the ones that reach out and just ask open questions, and if you develop sort of a good rapport with your professionals, they will be happy to jump in and answer something quickly, so you at least have some conception of what you may be facing. If you flip to page 2 of that contract, like Lewis was saying, and you don't know what something is, ask someone just so that is this, to prepare for that, do I need a day, do I need a year? You need to be able to manage those situations ahead of time so that you know where you need to be later on.
All right, Alan, any final thoughts from you?
Just, kind of to piggyback off of what Evan said and to lead us into sort of some topics for the future. There are so many different types of insurance coverages that may or may not be required. Environmental impairment liability, pollution liability are big topics and issues now. And prime contractors, a lot of government contractors are passing that off to the subs, right? And doing it in sort of a very templated, broad swath. This is a requirement that's going to cost their subs a lot of money that gets signed. There's contract execution and the prime sub relationships, I think, this is an excellent segue or an excellent opportunity to come back on in 2 weeks.
Yep. Can we get the next slide, please? All right, we did the Q&A. We did that as the next one after this one. So, and as Alan said, we are scheduled to do a part 2 on this ethics and compliance and insurance compliance in 2 weeks. We were going to talk about the ethics and compliance piece, but I think given the questions we've gotten and the questions we got during this presentation, we may pivot a little bit and include some of that in our next topic. Right now, we have we're scheduled to do 3 webinars on this general topic on compliance and government contracts. So we will reconvene in 2 weeks from today, same bat time, same bat channel, for those of you who are my age or older. So we'll see you on May 12th at 11 a.m. Please, please register and pass it around, and we'd appreciate any feedback and any suggestions on things we should cover next time. We can, as Alan said at the very beginning, we could talk for hours on this topic. There's lots of different ways to go and lots of different things to cover. So if we hear from a bunch of you that you want us to cover topic X, we'll make sure we cover topic X. It's impossible to hit everything. Again, for those of you who ask questions, at registration, we will go ahead and respond to you guys via email individually to try to address your issues and see what we can do for you. Again, thank you all for attending. This was fun. We'll see you all in hopefully to see you all in 2 weeks.
Thanks, Lewis. Really
Thank you, Lewis, and thanks
appreciate you moderating this. Great job.
Hey, no worries. It's fun when I can make other people answer all the questions that I ask. So again, everyone, have a good rest of your day, and feel free to reach out if you have any of these questions we hopefully scared you into asking about. So, and with that, I think we're all going to sign off here. Bye, everybody.
Bye now.
Take care.